Welcome, everyone. And if you don't mind, take your seats. Kind of a joke that I throw at the beginning of all of them. Hello, everyone. Welcome to our peer-to-peer session, Selecting a Business Entity with MJ Tax and Business Services. My name is Hendrik Hernandez Resto. I am the Creative Specialist at New Bedford Creative. Thank you for joining us today. Before I go any further, please enter your first and last name in the chat along with your emails for our records. Thank you. This peer-to-peer series is geared to enrich, educate, and connect creatives within our community. New Bedford is the home of artists, creatives, change makers, designers, entrepreneurs, and community enthusiasts. The peer-to-peer sessions embrace the pulse that makes New Bedford so unique, while also expanding our knowledge and connections. New Bedford Creative offers many opportunities for artists and cultural organizations. Join our creative directory, apply for one of our grants, or call for arts. List your event on our calendar, all for free at our website, newbedfordcreative.org. Peer-to-peer sessions is supported in part by the City of New Bedford through the American Rescue Plan Award and Arts, Culture, and Tourism Fund, facilitated by New Bedford Creative at the New Bedford Economic Development Council. We would like to thank Mayor John Mitchell, his administration, and the entire New Bedford City Council for their continued support of the creative sector. This is just one component of a broader initiative to boost arts-based economic development and help the creative sector recover from the pandemic. Before I introduce our presenters, I will go over the format for this session. Once I'm done, I will pass it over to Jessica Prince and Arianna Swink of MJ Tax and Business Services. Once Jessica and Arianna are finished, we will open up for Q&A. I will review the questions in the chat first, and then we can continue with the Q&A live. We have about 20 minutes for questions, so we can wrap up on time by 2 p.m. Just so everyone is aware, this session will be recorded. Please feel free to put your questions in the chat so we don't miss them when we open up for Q&A. Most sessions throughout the series have been recorded and can be found on our YouTube channel at New Bedford Creative in the following week. Now, I would like to introduce our guest speakers, Jessica Prince and Arianna Swink of MJ Tax and Business Services, who will teach us what they know about selecting a business entity. I will now pass it over to Jess and Arianna to share more details of who they are and what they will present for us today. Go for it, ladies. I am muting myself now.
I'm Jessica Prince. I own MJ Tax, and Arianna and I are both enrolled agents. So we have federal credentials that are issued by the United States Treasury. We've both been at this for a combined something like 37 years. So this is my 20th year, I believe. We're going to discuss selecting a business entity, and Arianna does have a cold right now, so she's going to be muted for probably the entire session. But she is monitoring chat, and if you have questions for one of us specifically, she can follow up with you, or I could follow up with you. But we're just going to get going, and if you do have questions, please put them in the chat and I'll be happy to answer them. If it's relevant at the screen we're looking at, I'll answer you during the session if I think it would help add to the presentation. So the topic today is selecting a business entity. And really, I think before you even select a business entity, this is kind of the order we're going to go in today. I think before people know if they want to open a business, there's kind of this questioning period where people are saying, well, I'm an artist and I dabble in this, but is it enough to actually be a business, or do I just have a hobby? So that's where we're going to start. And then I'm just going to go through the different entity types so that you can get a general overview and decide if it's time to take that step and become a business, what type of business should you open? So next slide, please. So a hobby, according to the IRS, is an activity that hasn't quite reached business level yet. And how do you know if what you're doing is just a hobby or not? So normally clients would come to me in this questioning period, and there are a couple of reasons why they usually show up. Either because they feel like they've made enough money that the IRS might come after them, and that might not actually be factual, but there's also the issue of sales tax at certain shows. And that's another reason why artists would typically show up at my office, wondering if it's time to become a business. So, what makes a business a business and not a hobby? Do you have the intent of making a profit? Or is this just something that you do for fun and you aren't actually trying to earn income from it? So the big determining factor is this profitable? And why is that important? As a business, the IRS would like to see that if you are in fact trying to make money at this endeavor, you should have a profit 2 out of every 5 years. If you are operating and you have a hobby, chances are you're going to be putting a lot of money into it. You're not really making a lot of money, so you have a loss. And if you have a loss year after year after year, the IRS could actually determine that you do not have a business, you have a hobby. So I'm not going to delve into the determining factors too deeply, but we do have some handouts that you can access that really goes through the nitty-gritty of what makes this a business that you're in for profit. Are you operating with the intent of making money? Are you actually keeping books? So I'll let you run through the list. I don't want to read the slides, but let's move on to, okay, now we've determined that we should be a business. What type of business should we be? So there are some things that are going to determine what type of business you're going to be. First off, how many people are involved? Is it just yourself? Are you selling some pieces that you've had lying around? Do you have a friend and you're collaborating? So we're going to start with the simplest business structure that you can have, which is a sole proprietorship. How do you start a sole proprietorship? You just go to work. You sell something that you just created, sell something that's been lying around. You really don't have a formal creation. So you could operate under your social security number. You have the option of getting an EIN, which is an employer identification number. That works similarly to a social security number. It identifies your business. It creates a level of separation so that you don't have your social security number floating around out there. So you just set up shop. You go to a farmer's market, you get your artwork put in a gallery, you're selling your pieces. Now you're in business. This is the easiest of the business entities that you could create because there's actually a separate schedule on your personal tax return. So this is part of your individual income tax return. We all file a 1040. This is a schedule on that return. It would be located on a Schedule C. And most artists start out this way. Let's see. One of the downsides of this is that you are in business for yourself, which means that you're going to pay income tax on your bottom line, but you also need to pay self-employment tax. Self-employment tax is your FICA, your Social Security, and Medicare. If you work for somebody else, normally an employer would pay half of this for you. But as a self-employed individual, you're going to be paying your portion and your employer's portion. So you get hit with a hefty 15.3% self-employment tax on top of your income tax. So a lot of self-employed individuals are really surprised when they come in for the first time and they made $5,000, $10,000, and they have to actually pay self-employment tax on that amount as well as their income tax. So if I went and worked at Walmart and made $10,000, my tax liability at the end of the year would be less than if I made $10,000 on my own as an artist. You have limited benefits as a sole proprietor. Some of these extra goodies that are associated with different entity structures require that you have incorporated. So let's move on to the next slide. So sole proprietorships are helpful when maybe you're not in business all the time. Maybe you're working through the winter to stockpile some pieces because you sell at farmers markets, or you have seasonal shows. You work out of your house, you have a small office in home, you have a small studio. Really, the place to start is as a sole proprietor. Next. So the next kind of glorified Schedule C or glorified sole proprietorship is, are you working with a friend? So if you're working with a friend, you are no longer a sole proprietor. You have a default partnership. And if you have more than one person and you have a partnership, you would file a separate tax return. So you'd actually file a Form 1065. You would divide the profits based on whatever allocation you've determined. It doesn't have to be 50-50. It could be 20-80, however partners work it out. But it really is taxed in essentially the same way. So you're still subject to that same 15.3% self-employment tax on whatever amount of the profit is allocated to you. You get the same deductions. There really isn't anything extra. It's just that you have another person involved. So these partners can have some of their own expenses, which is a little involved, but really it's just as a collective, you're going to have a pooled income, pooled expenses, and then the bottom line gets divided according to your partnership agreement. I would throw out there that anything other than a sole proprietorship should have a business agreement. Only because when other people get involved, if it's not just you, you need to make sure that you're on the same page and have an exit strategy, because if you ever want to end this relationship and it gets messy, having it in writing beforehand is a very good idea. So next. So this is, again, you could have two separate businesses that want to collaborate on a project. So if you have one person who creates sculptures, but you have somebody else that you would like to paint the sculpture, and now you're going to sell this product, and you sell it immediately and you think this is a great idea, I should do it again. Now these two businesses do have the option of creating a partnership. So say you're each sole proprietors, but you would like to each make create a partnership. You have that opportunity. two established businesses can collaborate, that is an option. So I'm gonna leave it at that. So a lot of people come into my office and they say, I've created an LLC. And my response is, okay, what kind of LLC? So a limited liability company does not determine your tax treatment. LLCs and corporations are created with the Secretary of the Commonwealth. So that is a state level election. Limited liability companies and corporations receive a separate level of liability coverage by separating the artist from the company. So we've determined you're going to be a sole proprietor. The next step would be, do you want to be a limited liability company for that extra level of protection? So when you form an LLC, that would be done at the state level. That has nothing to do with the IRS. But as a single member LLC, you are going to default to still being a sole proprietor. This gets a little tricky for a lot of people, including some tax professionals. But really, this is a legal entity that you are creating. You need to make sure the name is available. You do have the option of doing this online. You do not need to have an attorney or a tax professional create an LLC for you. It's available for anyone to do this with their self-service options on the website. Having an LLC does not mean that you have a separate tax return. You could still be a sole proprietor, file a Schedule C on your 1040. But it does allow transfer of ownership a little bit easier, and not necessarily if you're a sole proprietor, but I will throw out there that there are ways to transfer an LLC between owners. Let's see. You do have some annual filing requirements. In Massachusetts, the filing requirement is $500 with a $20 convenience fee. So you will need to file that every year. If you do not file your annual report after 3 years, the Commonwealth will administratively dissolve your LLC. So you want to make sure that you file that annually and that you are in good standing. Next. So why would you want to be an LLC if you're already a sole proprietor? Why would you want to pay that extra $520? If you own a gallery and people are coming in and could potentially hurt themselves, if you're using lead-based paint and some kid brings something home and decides to eat it, I would say that people are so happy, and having an LLC will create just a little bit more of a separation between yourself and your business. If you keep clean records and you are not contaminating your business bank account with personal transactions, then you are going to be able to, with a good insurance policy, mind you, be able to protect your personal assets from those of the business, so that if somebody does decide to sue you, they can't necessarily access all of your personal assets as well. Next. So just like a partnership, you have the option of a multi-member LLC. So this is where things become a little more interesting. Again, this is just creating a state level entity. So limited liability company, if you have a multi-member LLC, it's going to default to a partnership unless you elect a different tax treatment. So anything you can do at the partnership level, having an LLC is really just for protection purposes. It's for liability purposes. It's not going to allow you any extra benefits beyond being able to transfer the ownership in some cases. Next. I need glasses today. So an LLC will persist even after a member chooses to leave. So if you have a multi-member LLC, when you register or you create this entity with the Secretary of the Commonwealth, you're going to need to choose or have more than one member, but you're going to choose who you want to list when you fill out the documentation. You can add and remove people with the Secretary of the Commonwealth very easily. Everything can be done online. So it does allow for transfers of ownership or to bring on members and remove members very easily. So we are going to skip from the easiest business entity selection, where you're just a sole proprietor and you go out and you do your thing, to a corporation. And the reason I'm following up with a corporation is because that is also a state level election. So you can go to the same Secretary of the Commonwealth website, and instead of forming an LLC, you would form a corporation. So anytime you've seen INC after the name of a business, they are actually incorporated. So a full corporation is one of the more complex business structures. I would caution anyone against jumping straight into opening a corporation without seeking professional advice first, only because there are some more requirements. You do need to keep real books. You need to have meetings and minutes. You need to file a separate tax return. You'd file Form 1120. As a business owner, one of the biggest differences between a sole proprietorship or a partnership is that you're going to have more administrative expenses. You need to take payroll. Oh, I lost my screen. Okay, you need to take payroll. So you're going to have the cost associated with having a payroll company, unless you want to do it yourself by hand. Having real books means you might need to have a bookkeeper, and your tax return is going to be a little bit more expensive. It comes with a lot more fringe benefits that are available. I won't get into too many, but you can start, once you have payroll, you can start setting up things like more advanced retirement plans, like a 401k. You can have an HSA, which is a health savings account. You could have daycare expenses. There are other benefits associated with owning an automobile. It overall is probably the most expensive of the entities to set up because of these administrative costs. However, you would be a shareholder. You can then transfer this corporation from person to person to person as the shares are transferred. You can add more shareholders. You can transfer ownership rather easily. But you can incorporate or be an LLC and choose a different tax election, which brings us to S-Corps. So a subchapter S corporation is a tax treatment. It can be a tax treatment that is elected for an LLC or for a corporation. So you can be either or and still be treated as a subchapter S corporation for tax purposes. What does that mean? That means that you're going to file a separate tax return. It's an 1120S. And you would file that 1120S regardless of whether or not you are actually a corporation or an LLC. And there's a process that you go through, a form you submit. The IRS will then send you a letter back and say, yes, we have approved your S-Corp election, or no, we have not, and this is why. So the tax treatment is really what we need to talk about here, because once people have reached a certain net income amount, it usually becomes beneficial for these individuals to elect an S-Corp status. So the main reason, or the main thing that you need to be concerned about when you are an S-Corp is, are you reasonably compensating yourself? So when you are an S-Corp, you do need to have payroll. There are more administrative costs associated with an S-Corp than a sole proprietorship or a partnership, only because there is payroll involved. The IRC has never actually identified how you need to compensate yourself. They have left it pretty broad. You have to reasonably compensate yourself. What does that mean? You need to pay yourself what you would pay an employee in your situation. Or if you were an employee in the same situation working for somebody else, what would you normally make as a salary? There are some benefits of being an S-Corp. So when you have payroll and you are an employee of your own company, you're going to have federal and state taxes withheld. So are you avoiding the 15.3% payroll taxes? Not necessarily, because you as an employee of your own company are going to be paying half, but your company is going to be deducting half as an expense. This is helpful for people because if you are taking a majority of your net income as payroll, you're going to be withholding taxes as you get paid weekly, biweekly, monthly, however frequently you determine to be paid. But that's accumulating as if you were working for somebody else. So as long as you have filled out your W-4 correctly, at the end of the year, you should be having adequate taxes withheld and you won't owe money is the goal. Because as a self-employed individual, oftentimes, if you are not paying quarterly estimated tax payments at the end of the year, you owe money. So my goal as a tax professional is to get all of my self-employed individuals to make estimated tax payments. But if you are an S-Corp owner, it might be a combination of taking payroll and, depending on your bottom line, still also making estimated tax payments. So can you transfer an S-Corp? Yes, you can, in the same way that you would a corporation. There may or may not be shareholders. It depends on if you're an LLC being treated as an S-Corp or are you a corporation being treated as an S-Corp. But the main difference is there is payroll associated with this. So how do you pay yourself if you're an S-Corp owner? We talked about payroll. You need to be on payroll. First and foremost, if you have not reasonably compensated yourself, you cannot take a distribution. A distribution is when you are taking money out of the company and you're just transferring it to yourself. So say hypothetically you have a business and your bottom line at the end of the year is $100,000. And somebody in this line of business should be paid $80,000. So you take your $80,000 through payroll, and there will be some other fees associated with it. So I know this math isn't 100%, you wouldn't really have 20% left, 20,000 left over, but hypothetically, you have 20,000 left in your company after you've taken your payroll and you've reasonably compensated yourself. Well, you're still going to pay tax on that 20,000. You're going to pay tax on that 20,000 whether you take it in hand or if you leave it in the company. So you have the option of taking a distribution, which is really taking a portion of that $20,000 and just transferring it to yourself. And this is where the benefits of a corporation come in. You are going to avoid paying payroll tax on that. So you're not paying FICA, you're not paying your Social Security and your Medicare on that 20,000. So you can transfer that to yourself and you will only pay income tax on that. You are avoiding that 15.3% tax. You just need to make sure that you've reasonably compensated yourself first. So usually companies don't completely drain their business bank account at the end of each year. And one of the questions that I normally get is, well, if I have $20,000 left in my bank account at the end of the year and I'm going to pay tax on that, if it's now rolling over into the next year, that same 20,000 is still in my bank account. Am I going to get taxed on that again? The answer is no, because as tax professionals, that's what would be called retained earnings. We're actually keeping some money in the company. We are tracking it. You can then remove that amount of money from your company at a future date. You will not pay tax on that again. Next. So we are going to kind of fill out this overview a little bit over the next 2 weeks. Next week, our session is the importance of keeping proper books. And the following week after that is going to be setting up a new business. And I'm going to tell you how you would go about setting up either an LLC, a corporation, getting an EIN number, what type of business you're going to elect, and kind of walk you through the process. Next. Oh, so we're at questions and answers. I can't hear anybody. So I don't know if it's better to put questions in the chat field or for people to unmute themselves. But
I'm in the chat now, and unless somebody sees something I don't, I am not seeing any questions in the chat. So
I feel like I gave a really broad overview, but I can get more specific if anybody would like
yes,
more
if anybody has
specific.
questions, I think now we can start the live Q&A session part of this. She wanted to know if you have any advice for indie filmmakers.
Just keep track of every expense. So basically, if you're using anything for your production, and you have to go out and purchase it, please keep track. It's really important to have a separate bank account, and I'll get into that more next week, but it's easy to run here and there and, oh man, like I need to go get a clamp, or I need to go at the hardware store, or I need some tape. I need to go get these little odds and ends, and it adds up. Don't pay for anything with cash. That's my advice. Get a debit card or a credit card that's devoted specifically to that business. I only have one filmmaker currently, and I know for a fact he's missing out on so many expenses just because I can't get him organized enough to keep track of everything. Keep your receipts, so it's not just a matter of having that transaction flow through a bank account. You need to actually have receipts, because if, God forbid, you should ever be audited, you need substantiation for everything, or at least a huge majority of whatever it is you're going to be purchasing. So please keep track of it. And So that's pretty much it for indie filmmakers. But the next question is how best to determine when you should move from a sole proprietorship to another entity. And I would say there are a couple of factors. Really, yes, it's when there's a certain level, not necessarily of revenue coming in, um, possibly, but it's a combination of the revenue coming in and also your bottom line at the end of the year. Um, for some of my clients, unfortunately, we make that transition only because they aren't organized enough to pay their quarterly taxes, and we use it as a means of forced savings, which I don't necessarily condone, but in certain situations it's required uh, because my clients have had problems with tax authorities in the past. But I would say for the average person, yes, it's a certain level of revenue. It's there isn't a magic number. For each client, I like to sit down and run some hypotheticals because it's also going to be determined by what reasonable compensation is. Because if you're an artist, you could be making $1,000 at the end of the year, or you could be making hundreds of thousands of dollars at the end of the year. It really depends on your sales mostly, and um, what's good for you might not be appropriate for somebody else. I mean, you could be painting, you could be a jeweler, there are so many different forms of art that really your reasonable compensation is another deciding or determining factor about when you should make that next step. Anyone else?
Does anybody else have anything they want to enter in the chat?
You're welcome.
Yes. If you
And if anyone wants to reach out by email, I put my email in the chat earlier. If you have questions, it might take me a day or two to get back to you, but I will certainly answer questions and reach out to either myself or Arianna and use us to help you so that we can avoid messy situations when you sit down with your preparer. Only because we see it every year. People start their own businesses, don't necessarily have a lot of guidance, and it's easier to do it right from the beginning than to clean up after the fact. We know artists who have multiple projects. Is it best to keep them under one umbrella company or separate? It depends. So a lot of my answers are it depends. It's it's going to be determined a lot by business code. So the IRS has a list of business codes for particular activities, like if I'm a plumber or I'm a fisherman or I'm an artist, and sometimes they're vague. Artist is kind of vague. So I would say if you have kind of similar activities, so say you have different forms of art that you're creating, you might still be able to keep that under the same EIN number, same business code. But if you decide that now I want to be an arborist and I'm going to cut down the wood that I am now going to sculpt with a chainsaw, and you're doing specifically some work over here cutting down trees, that's a separate business than what you're doing with the wood after. So I would say if you could keep it all under the same umbrella, it's a little easier. But if the businesses are too dissimilar and they would fit under different business codes, you might not want to keep them under the same umbrella. And keeping them under the same umbrella might be messy just because you might not be keeping but the books separate, to know which business is profitable or which activity is profitable. If you are a Schedule C, you're a sole proprietor and you're preparing this yourself, you could have 5 Schedule Cs on the same tax return if you feel inclined. So some of it also depends on money. What are the administrative costs of having more than one business? If you're doing it yourself, not really, yeah, probably minimal. So it depends. That's that's what I have for today.
I have a question if you don't mind.
Yeah,
When,
go ahead.
every time I talk to my friends about LLCs, because that word gets just thrown around like it's a pancake, like just, hey,
It does.
right? All
It
right.
does.
It seems so commonly placed. What I understand about it is so that if the business gets sued, they don't, like you said earlier, they don't come after your assets. Um,
Mhm.
then what assets are they going after? The business itself?
The business assets. So what
Okay.
does the business own? And
Okay.
in some cases, the business might not own anything.
Mhm.
So it's really just protecting you and your personal assets from the potential of being sued.
Okay. Understood. Because I was always like, I'm confused about that. Somebody slips in my store and they get my car. Like, why?
Well, if it's owned personally
Yeah.
and you're a sole proprietor and you're not an LLC, you're not incorporated, there is that potential.
Because they need something to pay for like insurance, right? For the claim, for the whole thing, right? That all right, that's where I was getting confused. I'm like, so the LLC um buffers that, kind of provides a buffer in between that so that there's some money there that doesn't have to come out of your.
Correct.
Understood. Because the
And
entire
then
time I'm just like, why? But
it's
why?
a limited liability company. It's
Yes,
limiting the liability
exactly.
that you personally have.
Mm.
Um, but I would say that the term does get thrown around a lot. People will
Okay.
come into my office and they say, I have an LLC. Okay, well, how do you file?
Mhm.
I don't know, I'm an LLC.
Yeah, that's as far
Well,
as the conversation goes on my end. They're like, bro, you need to LLC, bro. For what? Because you need to, because everybody. And I'm like, wow, okay. So I need to dig into this further because it sounds like people are just like, just it sounds nice and fancy. But I'm not sure.
it sounds fancy. It actually does not determine your tax treatment,
Yeah.
though. There is a default depending on how many people are involved, but
Hmm.
that isn't where it needs to end.
Hmm.
So you can take the same, and there's kind of a roundabout way, and it wasn't intended that this be an option, but you can take a single member LLC, or you could take a sole proprietorship. I am a sole proprietor. I have an EIN number. I decide after the fact I want to become an LLC. I
Hmm.
can do that. 2 years from now, I want Arianna to be my partner. I can actually bring her on as a partner because I'm an LLC, even though I was once a sole proprietor. And I will tell you that having spoken to people at the IRS, they never intended to be able to convert a sole proprietorship to a partnership or an S-Corp, but you can by taking enough time to add the LLC, make sure that processes, file a return using the name and with the LLC, and then adding a member. It absolutely does work. I've done it a number of times. Was not the intention of it to work in that manner, but it does.
Understood. Hold on, let me just triple check.
Jessica, are you taking new clients now if someone were interested in learning more about what you offer? We put
I
your website in
I
the
have
uh,
I have limited potential for new clients, but Ariana does have availability. So
Okay.
depending on the fit in the office, it would be one of 3 people, but the office as a whole is taking on new clients.
Excellent.
And you don't have to be artist. We have, I mean, if you know somebody who is a business owner or just an individual that needs assistance. A lot of what we do is entity work this time of year. I do a lot of resolution work, so people who have tax problems, a lot of self-employed individuals do have tax problems, so I do some resolution work as well.
There is something in the chat.
I
Dougie,
own a few businesses and I have an LLC taxed as an S-Corp, but if I don't own anything or have brick and mortar type business, is it better to just do a DBA? So I would say it depends.
I was just going to answer for you.
So the reason it depends is because as an LLC taxed as an S-Corp, one of the main differences between just a sole proprietor, which is a DBA, doing business as, would be that this person has to be taking payroll right now. And is it beneficial for you to take payroll? Is it helpful for you to take payroll? I would say I would evaluate the bottom line and take a look at what would the difference be. So one thing that you can do on your own, if you happen to prepare your own return, is if you took your income without payroll and you were going to subject it to this 15.3% tax, and you didn't have that withholding every pay period, would you be okay with that? Because you have the option of revoking the S-Corp election, then will default to a corporation. You might not want to, but if you file, there is a form you can file to elect to be treated as a sole proprietor again. You can do that. So I would really just compare the two, decide if that would be beneficial for you. There is less administrative work for sure. You wouldn't have to file an 1120S. You would just revert back to a Schedule C on your 1040. It would probably save some administrative fees, but can you budget accordingly? And that's really what I run into with a lot of clients more than anything else is can you budget to pay your own quarterly taxes? And in a lot of cases, the answer is no. And people rely on payroll kind of as a crutch. So I would say you need to run the numbers both ways and determine maybe to cut back on some fees. You could do something like pay yourself monthly. I have one client that pays himself quarterly. There's nothing that says that you have to take a paycheck every week. You could pay yourself on whatever schedule you would like. There are some ways to cut back on the fees of an S-Corp without taking the step of dissolving the S-Corp entirely. You're welcome.
Anybody else? No, I don't see. Let me triple check the chat because sometimes the chat sneaks right by me and I don't get a chance to see what's in there. If not, going once, going twice. Okay. I want to thank you all for your time this afternoon. This was a great session. I'd also like to thank Jessica Prince and Arianna Swink of MJ Tax and Business Services once again for all their hard work. I also would like to thank our funder, the City of New Bedford, for making this possible. Please be sure to visit our website, newbedfordcreative.org, and join our free creative directory. This is the list that we use to promote on our social media throughout the year. Make sure to add your events, galleries, exhibitions, or more to our calendar page that is linked to South Coast Today. We want our creatives to excel, and we are here to help. We have plenty of peer-to-peer sessions coming up. Please join us for our next session with MJ Tax Services, the importance of keeping proper books. This will be happening via Zoom on October 1st at 1 p.m. to 2 p.m. Tuesday next week, October 1st. The link should be in the chat, but if not, always reach out to me and I can send you the link to the Eventbrite so that you can register there, and then I send you the Zoom session like I usually do. Lastly, the recording of today's session will be on our YouTube channel within the next week. At New Bedford Creative is how you find us on YouTube. Have a great day, and thank you all for your participation.